Hi traders, welcome back to the new weekly Forex forecast for the trading week starting on June 17th. In the current trading week, we had interest rate announcement from US Federal Reserve, and as anticipated, the Fed did not change the rate of interest. In fact, Mr. Powell said that he'll be looking for more data to support his decision to lower the interest rates. So because of his hawkish view, dollar gained momentum. In fact, in my previous forecast, I've already said that technically dollar is looking bullish. Now, in the upcoming week, we have a few more central banks coming up with the rate of interest announcement. We have Reserve Bank of Australia, followed by Bank of England and Swiss Central Bank, and none of them they are willing to change the rate of interest at the moment. It is not anticipated. So let's look on the charts and grab a few pips in the coming week. So let's start our weekly analysis, and the first instrument I'm going to cover is dollar index. Okay, so now let's begin our technical analysis, and the first instrument I'm going to cover is dollar index. Now to cut the long story short, I've marked the fib extensions on the daily frame. Now here at the bottom, this green box, it represents a strong area of support. This is the first leg up, correction downwards. This is the second leg up and correction downwards. So I've plotted fib extension on both the up legs, on both the bullish legs. So the first level inside, that fib extension 61.8 of the first bullish leg is here, and the 61.8 of the second bullish leg is at this level. So 106.15 is the upcoming level. Now currently, if you notice, dollar is exactly sitting on the first extension level, that is the resistance point, but based on MACD, I do not see any signs of slowdown in the bullish momentum. The MACD lines and the MACD histogram, they both are rising powerfully. Now let's move to the lower time frame, that's 4H. And on the 4-hourly chart, if you notice, we got into the bullish mode. So the buyers, they started moving up, they reached to the first level of resistance, dropped, but the sellers could not establish a new low lower than the previous low, so which is a good sign. And right now the buyers are being blocked at the first major resistance point of the first bullish cycle, 61.8. Once they'll break this level, the next level inside should be 106.15. Now for the timing, just for the timing, there could be some slowdown based on the current barrier. Now let's move to the next lower time frame, that is 1H. Now on 1-hourly chart, if you notice, the buyers have already crossed this level. So it's a break above this level. Now the retracement has started. So it all depends if the buyers, they are able to hold the level of 104.25. So we could see some retracement, some pullback on the lower time frame, and then continuation upwards to the next extension level. Now, the next instrument I'm going to cover is Canadian dollar versus Japanese yen. I'll start from the weekly chart here. Now, based on weekly chart, and let me just do one thing. Let me zoom out here. So, based on weekly chart, what I've done, I've plotted multiple bullish extension levels here, fib extension levels. So, I've started from the lowest visible point on the weekly chart, and I'm going to plot again the Fibonacci extension connecting from the lowest. Give me a second. So I'll start my fib extension connecting from the lowest and taking to the first high and connecting to the higher low. So this is the first fib extension cycle, and if you notice, it has already reached the extension level of 200%. So it precisely touched, if you change it to a candles chart and if you zoom in, you'll notice CADJPY has precisely reached 200 extension level of the weekly chart. Now I'm going to zoom out one more time, turn my chart into a step line chart, and this is the first bullish wave followed by second, and this is the third bullish wave. Now I'm going to apply one more extension on the second wave. So here we go again one more time. We'll pick the Fib extension tool. I'll start from the beginning of the second bullish wave, connect to the highest point and bring it back, and we'll just change the colors here to differentiate. So the next level in sight is 119.20, and one more time I'm going to apply the extension on the last wave. Now here I'll be using third wave entry point. So we have double bottom here with bullish divergence. So this is going to be my extension, Fib extension beginning point. And here we have the first blockage on the extension level of the previous cycle. And this is a small turn down. So I'll be using, in fact, it will be better if we apply this on the daily frame. So this is going to be my starting point for the daily frame. So I'll be moving down to daily chart now. And here I'll apply Fibonacci extension from the daily starting point and connecting to the highs and moving back to the higher low. So based on the daily extension cycle, again I'm going to change the color to black. So here the first extension at 0.618 of the third leg or the recent most daily leg is at 115.33, and if you notice, the buyers, they breached the level, could not sustain above this extension level, dropped. Buyers made one more attempt, blocked on the same level, and again dropped. So I can see that buyers are trying to breach this level of 115.33, but they have failed 2 times. So it's a sign of weakness in the buyers. Apart from that, I'm going to apply a rising trend line here, connecting the lowest point with the next higher lows. Now let's move to 4-hourly chart. Now based on 4-hourly chart, we got a massive move in the downward direction, starting from, give me a second, yeah. So I'm talking about this first move in the downward direction, and this was your attempt by the buyers, but they could not breach this level. They failed one more time, and this is the next bearish move starting from the highest point and to the lowest point. Now you can see, as per the price action, the downward move is stronger and the upward move is not so strong, because I can see multiple attempts by the buyers. They're just trying to gather some momentum and they're looking so weak in front of this bearish move. I'm going to apply Fib retracement on this downward move, starting from the highest point to the lowest point. If you notice, I can apply a Fib retracement from this high to this low, to the low point as well, the first one. So this is your first high, first low. This is second high, second low. And let's use Fibonacci retracement on the 2 downward moves. So the first one calculated, after this massive sell-off, the buyers could not go back to 100%. In fact, they got blocked in between 80 to 100%. And I'll be using Fib retracement one more time on the second down move. And here again, you'll notice after the massive sell-off, second time, the buyers, they could reach just 80%. So every time the buyers, they are stepping lower. So they're creating a lower high. And now I'm anticipating after this move, this is your corrective move. I'm anticipating once the sellers, they are able to break below this rising trend line, then they are going to retest this rising trend line coming from the weekly chart or the daily chart. Now let's move to 1H. Now based on 1 hourly chart, if you notice, after the third sell-off, starting from the 80% retracement level of the previous higher time frame, this is a massive sell-off. Now again, the buyers, they are trying to regain the momentum, but I'm expecting continuation in the downward direction. This is my expectation based on the technical chart setup. Now let's move to 15 minutes. Now if you notice, based on 15 minutes, now this is the move by the buyers, and they are right now creating a higher high pattern with bearish divergence, again a sign of weakness. So if in the coming week, if we find that sellers, they are able to break below this BS point, take it as an opportunity to sell. Now what could be your level of target? Now I'm going to apply Fibonacci extension in the downward direction, connecting from highest to lowest, and assuming that this is our point number C, then the first level in sight is 113.97 or 114 in round number, and the second downward target in sight is 113.58 based on the recent most downward leg. And coming from the previous downward leg, I'm connecting the major points here. So coming here, so this is our magnet zone. So we can easily target 113.5 in the coming days if we get rejection at the current price. So this is the plan for CADJPY. Now the next instrument I'm going to cover is Euro versus Australian dollar. Now I'll move to weekly, and in fact I'm going to monthly here to show you the higher time frame view here. So the bigger picture, I'll just need to remove all the drawings. Now this is the picture on the higher time frame. Now can you see this massive sell-off which was printed on the monthly chart? And after this massive sell-off, this is your first move up, first leg up, corrective. This is your again downward pullback in the upward move, and this is your second move up. And here I'm going to apply Fib extension. The reason I'm going to apply Fibonacci extension, I'll just explain it to you in a minute. Now I'll be starting from the lowest point, connect to the first high created on the first bullish journey. So here, this is your first wave up, ended with bearish divergence. This is your corrective wave of the bullish wave, and this is your third wave. So we have A, B, and C waves, and the extension level is 100%. So most of the corrective waves, after a massive sell-off or a massive rise, the corrective waves, they end on Fibonacci 100%. But most of the trending waves, they reach to 161. So here, the bullish extension means the bullish correction after this massive sell-off. So I'm talking about, this is the trend, bearish trend, and this is your ABC correction. Now the downward trend starts, and I'm going to connect a rising trend line here. Now notice, after this massive sell-off, ABC corrective waves, they are completed. The sellers, they have breached the rising trend line. They have taken the price lower, breaching the rising trend line. Now we got the retest, and the retest completed precisely on this rising trend line. So this is a retest, and I'm anticipating downward moves from here. So that's the reason I wanted to show the plan on monthly chart. Now I'll quickly move to weekly here. Now on the weekly chart, if you notice, this bullish action started here with the bullish divergence on the weekly frame, ended on the weekly frame with a bearish divergence. So this is the end of cycle. Now I'm going to apply Fibonacci retracement starting from the lowest point and connecting the highest point. So which will give us a fair idea that how far the sellers can take the price in the downward direction. Now currently we are in between 23% to 38%. Usually after one cycle is completed, market easily goes to at least 50%. Now this is your corrective leg down, again pull back, and now we are entering in fact we have already entered into the third wave down. So I'll apply fib extension in the downward direction to get the clear target on the weekly frame. Here we go, we connect first leg down and the corrective wave down. So here I'll just need to change it to red color. So the first level in sight is 61.8 followed by 100%. So this is our first target, and the second target will be in between 100% and 50% of the retracement. Second target. We can just get rid of the fib lines here as we have already derived the target. Now I'm moving to daily. Now based on daily frame, our plan is that we should sell on the rise. Now this is the downward trend line, and here if you notice, this is your first wave down, correction, again third wave down, correction. So we have room at least till 6100 here. Then you'll get a short-term bounce and followed by continuation to the next downward level. Now based on MACD, it's clearly bearish with no signs against. It might develop bullish divergence here when it reaches to the important level of support, and yes, it might develop. So on Tuesday or maybe Wednesday we have the RB announcement. So maybe on RB announcement, prior to that, Euro Aussie reaches to this important level of support, and after the announcement we might get some short-term pullback, and then again continuation downwards to the next lower level. Now coming to 4H. Now based on 4-hourly chart, I can see that the sellers are slowing down on 4-hourly because of the bullish divergence building up, and this is your higher high formation with bearish divergence. This is the completion of BOS, and now there could be some short-term correction, but any rise should be taken as an opportunity to sell because of the bearish plan coming from weekly and monthly chart. Now moving to 1H, it has already formed bullish divergence on 1-hourly chart. The last two lows have come with bullish divergence, but we do not have the bullish BOS. So we'll be waiting for the BOS so that the buyers could complete the correction and the sellers will resume their journey in the downward direction. So any rise is to be considered for short term, and the major plan is to sell on the rise for Euro Aussie. Now the next currency pair is pound versus franc. Now both currencies in the upcoming week, both countries, they are coming up with their monetary announcement, but technically this chart is looking good for short-term sales, and let's see how it behaves in the coming week. So here I'll just clean up the chart. Now this is the weekly chart. In fact, I'll go back to the monthly chart here again one more time, and I'm going to zoom in here. So if you notice on the monthly frame, we got lower low formation with bullish divergence, which means the end of bearish cycle, and this is your BOS level. So the buyers, they reached exactly to the BOS point. They could not close on the monthly level higher to this level, and now the sellers have taken opportunity to bring back the price to maybe 61.8 of this bullish leg. So here we got blocked at the BOS level. So this is the monthly BOS level. Now let's move to weekly here. Now based on weekly, if you notice, we had, give me a second here. Now based on weekly, if you notice, we had lower low formation with bullish divergence and the break of structure completed. The buyers, they reached higher than the monthly BOS level on the weekly frame. So on the weekly chart it was breached, but on the monthly chart it was not breached. Now we are getting the correction, and it's the typical pattern. After BOS is done, the market will come back for the correction, and I can see slowdown building up on MACD histogram here. So MACD histogram is right now getting lighter in the green color, and it is moving downwards. Now let's apply Fib retracement here, starting from the weekly low to the recent most weekly high. So currently pound CHF has reached exactly on the Fib scale 38.2%. Now we might get some short-term bounce here, and it may continue towards 50 or 61 in the coming weeks. So based on the higher time frame, we are planning for sell trades. Now this is your daily chart. Now daily chart I can explain. So here we got first move up, corrective down, third move up here, and corrective down. This is first, second, third, fourth, and fifth. So 5-leg bullish structure completed. So now we are anticipating ABC. Corrective moves up to 50 or 61% as per the Elliott wave count. So here, right now I do not see any signs of slowdown in the selling plan based on MACD histogram. It's gaining bearish momentum right now. And going to 4-hourly chart. So what I'll do here on the 4-hourly chart, I'm going to apply Fib extension in the downward direction, starting from the highest point, connecting to the 4-hourly first low and then the lower high. So here we go. So right now, even on the 4-hourly chart, there is no slowdown for the sellers. So this is the first level inside, which is around 1.272, and we can expect some short-term bounce here. And in the coming days, once you get short-term bounce, now please, if you are trading in the bullish direction, that could be short-lived, but the plan is to sell on the rise, and it's gonna continue to the next Fib extension level of 100%, that is 1.1155, which will complete the downward correction in this instrument. Now based on hourly chart, if you notice, on Friday market touched this extension level and we got some short-term bounce. Now this bounce could be short-lived because the major trend is bearish coming from the higher time frame. So pound franc, I am looking for bearish moves in the coming weeks. The next instrument is going to be New Zealand dollar versus Canadian. Now here again, based on weekly frame, I just need to get rid of the existing lines here. So what I've done, based on the weekly frame, we have this massive up move followed by the corrective wave. So I'm going to apply Fibonacci extension here. I'll start from the lowest point on the weekly frame, connect to the highest and the higher low. So the target level coming on the weekly frame is here at 0.8635, which is also Fibonacci extension 618, and the MACD histogram, MACD lines, they're still looking bullish, clearly bullish. Now moving to daily frame. Now the daily frame cycle, the latest bullish cycle starts from this level. So this is your first leg up, second leg down, corrective, your third wave up with higher high formation and bearish divergence coming up on the daily. So I'm expecting short-term correction in New Zealand CAD, only short-term, because the higher time frame, that is weekly chart, it's still looking strongly bullish. So I'll be applying Fibonacci extension on the latest daily up leg, the first one, and the price has reached exactly on 2.618. Now usually when price touches 2.618 and we get a bearish divergence, the downward correction will be towards the first extension level, the previous extension level I mean, that's 200 and followed by 1.61. So this is the expectation in the coming days. So I'll be applying on 4-hourly chart. So if you notice, we got bearish divergence here on the 4-hourly chart. This is going to be our BOS point. The sellers have already broken this level of 261. So the move above 2.618 was temporary. The buyers could not hold above this level. And what I'm expecting in the coming days, I'm expecting some pullback, retest of 2.618 and then continuation to 200. So short-term bearish moves followed by to the extension 1.618 and then continuation in the upward direction. So only short-term bearish plan for New Zealand CAD. Ultimately on the higher time frame, that is weekly, it's still bullish. Now here, based on hourly chart, I can see that the sellers have lost momentum. MACD has turned bullish again, which means some short-term pullback and retest of 2.618 and then continuation to 200% at least. So the price here is 84.77 and the price on 200% is 83.87. So there is an opportunity to grab this downward move and it's around 90 pips as per the calculation. And finally, I'm going to talk about gold. Now here, if you notice, I'll go back to monthly chart one more time. So what I've done here, which I've already explained multiple times in my previous weekly videos, that this is the beginning of the new bullish cycle, which was in 2015. So I've applied Fib extension here on the first up move and connected to the higher low. So price got exactly to Fib extension 400%. I've also applied one more extension on the latest up move starting from this level. I've connected with a red Fib extension here. The major one, the first one is blue, the second one is red. I'll move down to weekly so that you can see it clearly. So based on, sorry, not red, it's purple. So here, based on this purple extension cycle, the Fib extension 1.618 was at 2438 and the price got blocked exactly on this level. So I'm talking about this first move up, second corrective move down. I've also used a rising parallel channel here to show the rising trend. So here gold has breached the upper boundary of the rising channel, which means the gold has entered into the second parallel channel. So I'll be applying my second parallel channel. We need to duplicate it, clone it and put it on the first one. So usually an instrument gets rejected on the middle line. So yes, gold got rejected on the dotted line, that is the middle line of the second parallel rising channel, and it may correct towards the middle line of the first channel. Now here, based on weekly chart, I do not see any signs against. I can see that the price is creating high, higher high, and we have same pattern on MACD. We have high and higher high, and even on histogram we have high and higher high. So based on weekly chart, this is still bullish. Now moving down to daily chart. Now based on daily chart, I need to adjust the view. So based on daily chart, here we go. So we have higher high formation with bearish divergence, but the sellers have not broken this BOS level. So the sellers are not looking stronger. In fact, we have an important level of Fib extension that is on the monthly frame, and which is also Fib extension 400%, which is coming on 2335. So 2335 is an important level. So in the coming days, if the buyers they breach this level with a successful retest, then they might take the price higher, clearing the previous high. If 2335 is not broken again, then the sellers may gain momentum and take the price lower for short-term correction. And the first level in sight is 2220 or 2205. So this is the level in sight. So this is the plan for gold based on higher time frame. And let's move on to lower time frame. That's 4H. Now based on 4-hourly chart, if you notice, we have a sequence of high and lower high. So until buyers take the price above this level, so this is in terms of value, this is 2387. So until buyers take the price higher than 2387 with a successful retest, the plan should be to sell on the rise because of bearish divergence formed on daily frame. Now here I'm joining a downward channel, parallel channel. Now because it's a downward channel, so I just need to change the color from green to bearish, that's red. So currently, if you notice, this is your first leg down, then this is your second leg down, and again we might see some short-term correction towards the upper boundary of the falling channel and then continuation lower. So I'm still not bullish in the short term. In the long term, I'm 100% bullish. So we might get correction in gold towards 2220, 2205, or maybe the round number of 2200. So please trade carefully because dollar is also looking stronger here. So if you notice on an hourly chart, in the current week after this massive sell-off, the buyers could not close the price higher than 2335, which is again a major fib extension level which was taken from the monthly chart. So short-term plan is to sell on the rise. Once it reaches closer to 2200 or 2220, then I'll switch to my long-term buys. So this is my trading plan for the coming week. I wish you all a happy and profitable trading week ahead. Bye-bye.